Good morning, traders. Steve Ganz here. Wanted to share a new start to finish trade with you. But please keep in mind, I've had comments where people have, let me know basically that they would have liked to have seen how I managed the trade at the time that I managed it. These are all designed to be paper trades. This is not designed to be an alert service. This is designed to be educational content to help people understand how different trades work and how they play out. That's one of the huge benefits of optionstrat is I can play all of these what ifs. So I'm going to do one of those in DOCU. Okay. So what I want to do is I want to come in this particular case, I'm going to do a calendar around earnings. So let me just show you what the chart looks like. So DOCU, the past 3 earnings cycles, it has run up into earnings, then dropped down, ran up into earnings, right after earnings, dropped down, ran up into earnings, dropped down. It's running up into earnings now. Now, today is Wednesday, the 6th. Their earnings happen tomorrow night after the close. So 12/7 after the close tomorrow night is when their earnings are going to be. So it's all going to be about where does this thing open on Friday morning. But my game plan here is that I want to have a calendar because I personally just like calendars around earnings because it does give me a little chance to adjust that trade if it goes sideways on me. And that's what I want people to kind of learn and play with and study. So just know that I may or may not end up putting something out on Friday as to how I adjust this. But I want everyone to look at this trade themselves and in paper and play out your own scenarios on this. That's the goal or the objective here. But let me show you how I do want to go ahead and open this up. So I'm going to do a put calendar, okay? But I want this calendar to be below the market. In other words, my premise here is that DocuSign is going to sell off. And I want to go to, by the way, I want to go to strikes that are highly liquid. And it's really awesome that right here in OptionStrat, I can see that there's a lot more open interest at this level, at the 45s, a lot more activity than there is at some of these other strikes. So that's a logical place for me to go in this case. That's going to mean that my bid-ask spreads are likely to be a little tighter, etc. So my premise on this trade, and I'm going to put this in here. I mean, this is at a 1 lot. My maximum risk in this trade is what I pay for it, which is going to be $22.50. Excuse me. So I tend to make my trades a little bit larger than that. I keep my earnings trades small, but I think an 8 to 10 size. I mean, at 8, I have a $200 max risk in this trade, or a little under $200 in max risk. So what I'm doing here, just to be clear, is I'm selling 8 strikes that expire at the end of the day on Friday. I'm going to get somewhere around 80 cents for that. That's the difference, or that's the middle of this bid-ask spread. So I'm going to take in $640 in credit for this particular part of the trade. Then I need to go out and buy my long strikes. I'm buying them a week out. So because they're a week out, they're going to be a little more expensive. Because there's more time for things to happen. And we're going to be at around $1.03 on that. Again, the difference between the bid-ask spread. That's the mid is $1.03. So I'm going to go ahead and save this trade, and I will copy this link. I'll put the link in the notes down below so that people can go in and copy this into your own account. Again, as paper, and then let's watch this. Let's see what happens on it come Friday morning. Now, I will tell you that I also usually put an order out there to sell this. I like to have an order just setting out there. So this combined trade, I paid, I think that ended up being about 23 or 24 cents for that trade. The difference between those two, let's see. Let's see, max loss. I did 8 of them. That's right. So 180 divided by 8. I probably should have done it in 10 just for easy math. But anyhow, that's what I, excuse me, paid per spread for the trade. Sorry about that. Had a little cough there, but I also asked Google to do the division for me, so it's 23 cents. I paid 23 cents per spread. Now, I go out and for me, I just kind of automatically place an order out there to sell half my position. In this case, I put an order out there to sell half of it at 50 cents. So if, in fact, DocuSign gets a little bit of a pullback come Friday morning, it could even be somewhat of a sizable pullback, could even, be down in here somewhere, it's possible, or the hope is, that I will be able to then take off half of this position, 4 of these, at not quite a double up because I paid 23 cents. I'm going to sell them at 50. And again, that's kind of an arbitrary number. It's just something I like to have setting out there for when the open occurs, and then I'll kind of adjust and or see what happens from there. So this is a relatively inexpensive earnings trade that has a very good reward to risk ratio. It has a potential reward up here in the $1,500 range. And a max risk less than 200. Now, I want people to, if they can, watch this on the open Friday. One of the things that you're going to see happen instantly is this tent is going to shrink up because volatility is going to drop right after earnings. After earnings are announced and people know the outcome, there's not the suspense anymore. The unknown becomes known, and the first thing that happens is this tent goes like that. It shrinks up. Now, our max risk does not get any greater, but our range that we can profit in will drop quite a bit. What we want to have happen, and again, this is one of the cool things about optionstrat here, what we want to have happen is that I can come in and I want the December 8th strikes, the strikes that I am short, I want them to drop significantly in value so that I can buy them back at next to nothing. And then I ideally want the December 15th. They're also going to drop in value, but I want them to maybe drop a little less in value. And that's what will create the profit in this trade. So that's what I'm hoping for. That's the ideal situation there. And that's what I'm going to be looking to have happen come Friday morning when the market opens. So that's it for now. Let's see how this plays out come Friday.